Hi, everyone, and welcome to the FF News Virtual Arena. Today, we're looking at using data intelligence to boost transactional profitability. I'm Ian Horne, I'm hosting today, and I'm joined by Brino Alves de Oliveira from PAYABL, Kirill Asitsin from Torus, and Maria Komisarova from Raiffeisen Bank International. So we're going to get started with a very basic question, which is for everyone to tell us your name, your job title, and the organization that you're representing. Brino, let's start with you.
Hello, everyone. It's a real pleasure to be here with you today. My name is Granular. I'm the Chief Product Officer at PAYABL. Here at PAYABL, we are doing our best to move the needle when it comes to payments infrastructure, as well as payment acceptance and payouts as well, whatever it means everywhere in Europe. We are here to reduce friction and more than happy to be part of this panel today.
Great stuff. Thank you. And Kirill, over to you.
Yeah, hi everyone. I'm Kirill Asitsin. I'm the co-founder and CEO of Torus. We're SaaS intelligence for card payment players, so issuers, acquirers, helping them to boost their profitability by better analyzing their costs related to scheme fees charged by MasterCard or Visa.
Great stuff. Thank you. And over to Maria.
Yeah, hello, Maria Komisarova. I'm representing Raiffeisen Bank International. I'm working on the data and AI topics for the retail business, and Raiffeisen Bank International is served 10 different countries. Like very hands-on, and my team is providing the guidance on the data and advanced analytical and AI topics there. So I will be from that side of the topic of profitability and making the use out of the data, and transactional data is our asset in the banking industry, being very honest. So we heavily rely on that.
Brilliant. We've got a great panel. Let's get straight into it. So when we talk about payment transaction, transactional profitability in 2026, what does that really mean? I mean, is it margin per transaction, customer lifetime value, cost to serve optimization, or something else entirely? Kirill, let's put that your way.
Definitely more about unit level margins. So if we talk about acquiring, this would be merchant level, maybe terminal in case of like card present acquiring. If we talk about issuing, this probably would be product level, sometimes like customer level, depending on the data available. And through that, so by knowing that at the granular level, you can then build this like over the time. So also calculating the lifetime value as well.
Great stuff. And Maria, I see you nodding there. Do you agree?
Yeah, I'm partially agree. I'm not disagree, but from my position, I would like to add that for me, transactions is also not about the profitability on each transaction, but also how we utilize this information afterwards and build some value on top of that, building some advanced analytical solutions. For example, now we're working on the money manager topic, which uses transaction to engage the customer more with other banking products and being on top of the mind of the client, which also brings some profitability, but later on, and which also increase the customer lifetime value. So from my role perspective, the transactional profitability goes beyond each transaction happening in each moment of time. It's also about the future asset, which we built on that.
That's lovely. I tend to agree with Maria. I would say that maybe in the 2010s, payments meant more on the spread side. What's the gap between what you charge and what get paid? And now what we are seeing more is that what's the total cost of ownership, settlement time, what type of user experience you provide, chargeback costs, and if a transaction can be settled within 48 hours and authorization rates. This type of things are surfacing not only on the transaction level, but on the whole profitability of a given program. This being a new card program, card issuing, card acquiring, or a new local payment method. I think the merchants they are looking after the whole revenue as a whole, and how it plug and plays with their operations, right? Because sometimes what may seem on a transaction level something good, it comes with monthly minimums, or it comes with some burdens, or with chargeback risks. I think it's more on the product side. I would say that it changed from a transaction level to a more holistic level, as we have seen the migration of big financial institutions into smaller ones that do the jobs of those big financial institutions better in their own niche.
Yeah, really valuable points. And I want to build on that and talk about how that's impacting your organization or even your clients.
what I see from PAYABL sides, that our clients, they come with a strong value proposition when it comes to the business case that they have in mind, and they no longer look after a profitability on the transaction level, but they want to understand how much it will cost to make that specific business case come through. That's where we have seen that we need to have all the pieces together, and where we rely on our partners to know the exact cost of everything that we have throughout the journey. This being with the card schemes or let's say integration costs and everything together to bring to the merchants the full pictures that they need. Yeah, they no longer want to know something from risk, something from product, something from finance. They want to know, okay, this is my business case. I'm here to deliver this business case. You, financial institution, what can you do about it? And what type of product setup can you offer us? And that's where we need to rely on good partners on our side to make sure that we can provide reliable data. Yeah, that's where comes in reconciliation and all of the aspects that Kiro is an expert of.
Yeah, I totally agree, because indeed it's kind of a building a puzzle. And in the end, you should have a holistic picture. And in order to have it holistic, you also need to make sure that all the pieces that you're building from, they're reliable. Otherwise, the pieces of the puzzle will not be matching each other, right? That's very true.
Absolutely, absolutely.
Just maybe to add to that thought, again, one more perspective on the data which we are building on. I think it's we also can provide additional extra information and some insights to the merchants based on the data, and that might provide additional value. So not only the transparency, which is the basic need to give a transparency, to give a clear calculations and clean calculations, but also go beyond and give some insights on the way how they can improve their own businesses. Because, for example, we as a bank, we have a more holistic picture and we have more information on the market, and we can produce the insights which might be very useful for the merchants for their own businesses.
Yeah, great stuff. So it seems like transactional profitability is far more than just transactional these days. So really, really interesting points raised there. Maria, I'd like to stick with you. I'd like to ask where you see banks currently losing profitability in transaction flows. You know, is it a data problem, a pricing problem, or like a legacy infrastructure issue?
Yes, a very good question. And obviously, if we ask the product teams, they might answer differ. But for me, what I'm really observing, and this is a huge pain point in the organizations like Raiffeisen Bank, who is like already more than 200 years on the market, you know, we have a huge legacy, and the data is the one of the big pain points there. So usually it's very hard to collect all the data in the transparent structure way so that you can provide an accurate calculation of the profitability of each transaction. So there are a lot of legacy problems. There are problems of the way how the data was treated before. So all this data mesh concept, which recently, not already recently, but still like not far away appear on the market, are not still very well spread across the organization. And that's, I believe, where we really lose a huge potential, especially now when we speak about the AI transformation happening everywhere, and also it's addressing the transactional world and the transactional business, agentic payment topics also quite interesting. And all these aspects make this even more important to treat your data properly and to really build this foundation in order to be competitive in the future. Because now it's not about providing something on top, it's about really surviving. That's my personal belief, professional belief.
Yeah, it all comes down to the money flow, right? What you want to do with the money flow to make sure that it's as smooth as possible.
Yes.
And data will help us on conversion, will help us understanding what type of pricing is sticking, what type of pricing is not sticking, and of course we need to rely on the data that we get and take into account big financial institutions. How you process that data is as important as getting the data itself, right? Maybe with the help of LLMs today, it becomes easier, but it's still not an easy feat to make sense out of this humongous amount of data. So I see the challenge, I see the opportunity, but still the way is rough.
Indeed. And just maybe, sorry to comment on top of that, what you said, that it's also about, if you speak about the profit, it's about the cost part. And this amount of data, big amount of data, to collect them and to store them, it's quite costly. And if you not make a use out of it, you also kind of start losing in this pricing game, because you already start having a huge cost, but you don't have a profit value out of that. And then you can't already provide to the merchant a better price and be competitive. So actually, even though the data, it sounds very technical, but it's a big foundation which make you a possibility in the future to be competitive.
Yeah, that's true. And if, I don't know, 5, 6, 7 years ago, everyone was talking about, hey, we need to get more data, so let us feed the something from the social media or whatever. So nowadays, and we usually, so our point is that it's not always about getting more data. It's in most cases about extracting the value from the data you have. And only after that, if you realize, oh, I need something else, then you go and get more data. Because exactly, Maria, as you mentioned, that getting more data means having more cost. And if there's no use case on top of that, and even like doing something with the data becomes more and more kind of operationally, kind of like an operational hurdle. So yeah, that's totally agree here.
Yeah, and when I think about it, I'm just like concerned about the data format, and that's what fintechs do very well, which is like to get this amount of data and try to transform them into formats that are easier to digest. Because when we think about some of the legacy systems that we have across the board, right, they all talk different language, they all have different formats. So how to make sense out of it if they are not on the same format? I would say that AI also helped a lot with this type of revolution when it comes to transforming the data and transforming it to something that's even easier for AI to digest afterwards. So I think the future is bright when it comes to data interpretation and how we process data.
Here, if I may, I would a little bit disagree. I will explain why. The reason is that as I'm more with the technical background in my career, I must say that the AI, and in particular large language models, they are very powerful, but they are non-deterministic. And that's lead us to the problem of this famous hallucination. But in a nutshell, it means that if you do not have the accurate data under the hood, you increase the likelihood that you will have incorrect results afterwards, which might cost you a lot of money also, especially depending on where you're utilizing that. So here, you're absolutely right. The legacy systems speak different languages and you need to work on that. But so far, the Gen AI world, even though it looks very advanced already, but it's not advanced enough. And I'm quite suspicious if we will anyway reach this level, considering the algorithm which is used under the hood, so that we can through whatever data there and receive some value out of it. I think there are no silver bullet. You will anyway need to spend time, spend money, and have a good specialist in your company to build this layer, this data layer proper. And it's not like you will rely on AI and that will solve all the problems. So here we are not on that level yet. Let's see what the industry will bring in the future, but now we're not there for sure.
Yeah, no, indeed. And that's interesting because we're often asked in our case, because what we do in exactly under the hood, as you mentioned, it's kind of deterministic, because we're sticking to have it as accurate as possible, not about having like, I don't know, 80% probability. But at the same time, there might be some kind of hybrid models when you have the core being deterministic, and then you still may apply some of the like LLMs or something to interpret the data to make the user to easen the life of user to work with the data. But yeah, it's just a matter of balancing between the two, probably. Yeah.
Yeah, what I was trying to allude before on my comment was that we can use the data layers that we already have into place, maybe data lakes or something like that concept, and then derive hypotheses out of it that before would require so much work just to get the hypothesis going. And then based on those hypotheses, you can check the likelihood of those hypotheses going into the right direction or the wrong direction. And then what happens is that the likelihood of you succeeding with implementing one of those changes will be much higher. Because after all, we don't have a silver bullet for everything. Business is business, needs to be profitable. We need to look after everything on a transaction level, on the operational level, on the product experience level. And we cannot simply look at the market. We need to look at the market, our data, our competitors, everything all together, and then to try to come up with hypotheses that make sense and justify changes, and that sometimes will be investments.
Yep.
Great. I'm going to have to move the conversation along, unfortunately, but that was very interesting stuff. Brenno, I'd like to go back to you and ask from your perspective, how has data changed the way that merchants evaluate transaction value beyond simple processing fees?
Well, we have been talking about big data for a long time, and what happens is that nobody knew how to handle big data. I would say now we are past that, luckily. So we know how to handle big data in terms of storing that, in terms of having our servers up and running, having the technology and the right language such as Python to make the most out of it. We do know that, but what happens is that it's moving into a direction that requires interpretation of that data, right? And when it comes to the value of the transaction itself, it's much more important to understand the direction of that value of the transaction into the payment flow than the transaction per se, right? So, example, we'll be looking at rates by card type, we'll be looking at issuers, we'll be looking at geography. So we can make smaller changes that will have the highest impact. So it's going to be like the Pareto rule, right? You want to find the 20% change that you can make, that you have those 80% impact, yeah? And I think that's where the data has changed on how merchants evaluate, because they realize that, example, nowadays you can have companies that have like 20 headcounts that are over a bit, that they are unicorn today. And how is that possible? Because they focus on what is the big win, yeah? And I think that's what is changing there. How the transaction and how data they plug and play together to surface the most important aspects of that. There would be a broader change overall across the board.
Great stuff. And Kirill, what are your thoughts on that?
No, that's I would agree that given our also perspective and like talking with merchants as well. So more data doesn't always mean like better understanding for them. Also, it's very segmented. So if you're a large merchant, you have your kind of a payments team inside or the data team inside, which can then create more value out of the detailed data you're getting from your acquirer. If you're like small to mid one, even if you get a lot of data on top of what you're getting from acquirer, you just don't have resources, expertise to extract the value out of that. And so that's why it's very kind of specific approach depending on the segment. And it's about like knowing your customer needs in the end. Yeah. So how can you, as both like Brenda and Maria mentioned, can you add something on top that just the standard report that you're like sending on a monthly basis or daily basis to them? If there are any insights on top that they can then use, they really appreciate that going forward.
Yeah, it's changed, right, Kirill? It changed from a merchant perspective. Before it was like more of a pricing conversation, and now it's more of a data conversation. It was like, what's your transaction value, and what type of rates do you have? Is it blended or is it IC++, right? So, and now it changed like, okay, but what can you do with the data? Yeah. Because now everything is out there. We have also automated onboarding, a lot of things happening. So, okay, what you can do with the data, and what type of support can you give the merchants per se, right? And that's where financial institutions need to have like put their act together and make sure that whatever data they expose to their merchants is like accurate and will not hurt them down the line. It's no longer a case of, okay, we are talking about some basis points of the transaction level. We're talking about the whole journey.
Yeah, I think this is a really good point, because having lots of data is kind of not that useful if you don't know what to do with it, or if you don't know which data points are important and which ones aren't. So Kirill, Brenno, or even Maria, do you have any advice that you can offer to merchants on how to analyze that data, or how to figure out what data is useful?
I think Maria is the expert here. I'll leave it to her.
Many thanks. I can start and then you can complement me. So basically, I'm speaking from the banking perspective, and here I see the bank can bring a lot of value to the merchant, as I said, because the merchant can observe only their data. Yeah, and the bank can provide some aggregated evaluation of the market on the similar categories. And here this partnership can be quite useful. It's, for example, remind me one use case which I saw within the group when we provided some statistics to the merchant about how the customers behave in their category with them and with their competitors on the aggregated level. So from the GDPR perspective, it was very accurately done. But that motivated the merchant to participate the loyalty program of the bank and sponsorship this loyalty program, which bring the value to our clients, and we have more transactions within our clients, providing more insights to the merchant. So actually there are a good potential of having some win-win cases, which will be good for the bank because they're not kind of sponsorship the loyalty program, and good for the client because client receive finally some bonuses. And that's kind of a good example of how you can build on the data something which is useful for all the three parties.
Great stuff. Yeah. And I'm going to move on to the next question, and I'm going to move on to Kirill and ask you, where do you most often see value leakage in transaction economics, and why are institutions missing it?
So I think we could split it into both, like on the cost side and revenue side of the business, because sometimes when we talk, let's start with the cost. So sometimes you look at portfolio, and when we start talking to our prospect customers, so in many cases, like portfolio-wise, business looks good, but then you try to drill down, and at merchant level, usually there are some like loss-making ones. It could be quite substantial part of the business in some cases, and it already becomes difficult to drill that given the level of data aggregation that acquirers are getting. At the same time, and even further, so for that specific merchant, sometimes the merchant looks good, but then you drill further and then you see that some specific transaction types, or like geography-wise, card types-wise, they're actually loss-making, and then you might want to go and reprice them in order not to sell like €1 for 80 cents. But at the other hand, when you look from the revenue perspective, it could be vice versa, because we had some conversations with some of our customers when we just started, and they were telling us, hey, we were, for example, for like inter-regional transactional, this is our price, and that's what my pricing tells me. That's the lowest one we can go, otherwise we'll be loss-making. But when they started with us, so they see that actually this specific segment of transactions was the most profitable for them. So they could easily go like 50 bips lower, still be very profitable, but much more competitive, which would bring more profitable revenue, more profitable volumes to you. So that's why it's not always about just optimizing the costs and optimizing the kind of profitability leakages, but also sometimes about like adding competitives and bringing more profitable revenues.
Yeah, what I would add there is that sometimes routing is underrated as a source of leakage. Many times merchants, they're plugged into financial institutions with static routing. And then what happens is that the reality of the merchant changes across time, and then it's never revisited until the merchant raises as an issue, right? I think dynamic routing is out there, and that's where we see by 2 to 3% points sometimes on improvements on the auth rates. But yeah, I think that's revisiting the routing and how this is adjusted throughout time when the merchant's on board, and I guess 2 years later, 1 year and a half, or something like that, or if it's a merchant in hyper growth, it needs to be revisited on a quarterly basis, something like that. I would say that this is usually underrated from my perspective.
Great stuff. Let's move on to the next question. And Maria, I'm going to put this one to you, which is, what is the single biggest internal barrier preventing organizations from turning transaction data into measurable profit? And how do we overcome this obstacle?
Yes, I love this question, actually, because that's what I'm dealing every day in my organization and try to solve this problem. So we tried different approaches to address these data problems and the barriers, and mainly it's a mental barrier. It's a change management part, because technologically wise, we already have a lot of good technology in place. We in particular, for example, using Databricks, AWS, some people or some companies using Microsoft, Google Cloud, doesn't matter. All the technologies are good. And usually what I'm observing, the problem not with the choosing the right or wrong technology, it's about how you treat your data. And here, I think the main and important message or the learning which I found so far that the data should be treated not by IT people in the silo, but by the product teams who is kind of owning the product. So in each product team, and this goes hand in hand with agile transformation, which was like a topic in the industry like many years ago. Now we need to make the agile transformation in the data treatment, and that the product teams has a necessary knowledge and the people inside to treat their data properly. And we need to shift the mindset from the customer consumer view from the provider view. So each team need to provide their data for the rest of the organization in the format which is readable. And then the other parts of the organization can generate the profit on this data so that we are removing the silo between the teams.
I think you nailed it in the head, Maria, 100%. The biggest problem is ownership, right? We have like risk team, we have finance team, ops, product, and most organization, a single team does not own anything, yeah? And whenever we give the ownership onto a specific organization inside of your company, then things turn around because we have like more skin in the game, we can make more optimizations, we can hold people accountable, and then we move from a dashboard driven by every single department on their silos to a real structural change.
Yeah, from our perspective, we typically see a lot of, but it also it comes to the same mental problem, a lot of inertia. So it's much easier to keep on doing what you're doing rather than go and change something in the approach, especially when sometimes, so again, portfolio-wise, the business is doing good. So they're not a lot of problems which are over the water, but there might be a lot of them under the water. And then you need to have this prioritized to go and have a look at them and do something with that. And exactly, Brian, as you mentioned, take the ownership. Especially sometimes what we like clearly see, it could be if it's kind of a team who has been running this business for many years, they used to do it in some way. And then for them to have a like additional way of looking into that and then standing up at some meeting, board meeting, whatever, saying, hey, we think something needs to be changed here. That's a big challenge because it's much easier for a human being just like to keep profile low, just keep on doing what you do.
Very, very right. And here I would like to stress out that the big part of the work is on the top management, because the data topic in general, it's rather feels like a vague topic in the organization, because the value comes when you reach some level of the data literacy in the company. Yeah, it will not come from the particular use case. The broader value comes when you have reached some level of the data availability in your company, so that you can build cross teams use cases and the profit generator mechanisms. And in order to reach this level, you need definitely the huge support from the top management, and stop thinking about the profitability as the profitability of the product, but as a profitability of the client. And then you can start really moving into the right direction. And without the support of the top management, at least my experience so far shows that it's rather like not almost, it's impossible to turn it around and to make this mental shift in the organization.
Yeah, really interesting point. And we have time for one final question. We're going to do some future gazing now. So looking ahead to the next 3 years, what will separate the institutions that successfully turn data intelligence into sustainable profit from those that fall behind? Kirill, I'm going to put that to you.
So again, I'll be very interested to hear like Bren and Maria on that, but our perspective is that so the whole industry goes in a way that the margins are being eroded, so that we're talking about like basis points these days. So that's why this kind of a data utilization is becoming from something that used to be nice to have not that long ago into must have. So it's actually the way to survive in the market. And then, so basically these days, in order to succeed, you need to be competitive yet profitable at the same time. So it's about finding your right place, your right segment, being able to calculate all the bits and pieces, extract additional value adds on top of what you calculate, and then feed this back to your customers in a way that they can like absorb that and do something with that going forward.
Great stuff. And Bruno, same question to you, which is looking ahead to the next 3 years, what will separate the institutions that successfully turn data intelligence into sustainable profit from those that fall behind?
I think it's moving from a dashboard-driven decision-making to a more of a real-time. I know this wishful thinking to think about real-time, but more or less real-time decision-making, where we having reports is good, but what happens before the report? What's the likelihood of a transaction to have chargebacks? What adjustments I can make today so tomorrow I will have less chargebacks? How can I get this data plugged into my decision-making process, as well as the technology that I have, and how can the org structure be fast enough to move along with the current trends, right? We see things moving along very fast, and if, as Maria said, if the org structure and the top management do not support those movements, what's going to happen is that the companies and the fintechs, merchants, they will all lag behind. It's no longer a matter of pricing; it's a matter of using the existing technology to provide you with means to make better decisions real time instead of waiting for those alerts to come up.
I just want to subscribe to what Kirill and Breno said, because I'm fully agree with this both statements. So first of all, that let's be honest, now we have a lot of startups or digitally originated companies on the market. And classical companies like my bank, we are on the one hand, we have a huge asset of the trust from the clients, which we can rely on. On the other hand, obviously, we are not digitally originated company. So real-time topic for us, rather something which we need to work hardly. And for companies who is digitally originated, the real-time is something which is given from the beginning. So from the beginning, they built all the infrastructure that it's streaming first. So in order to be competitive here, we need first of all to find the right segment for us and rely on already our strengths. Like in our case, it would be the trust of the brand, because we are really very sustainable, risk-averse bank. And on the other hand, be fast and smart enough to turn the org structure, the way how we treat the data and the technology, so that we can continue provide the profitable offer for the segment which we choose. So I think it's exactly a perfect combination of both statements. Find your segment, and build within this segment the good value proposition which would differentiate you from the others, relying on the data technology. And here, only the right investment and the right support from the top management can help, because being very honest, it's a huge investment to deal with the data topic, to build the layer so that we can benefit out of the Gen AI transformation happening on the market, to build ontology. It's hard to think. Before we spoke only about real time, we spoke only about the big data. Now we speak about building the ontology layer, building intelligence layer, building conversational layer on top. It's a lot of technological topics which need to be solved in order to be competitive. And other companies who, as digital native, they will do this faster. And the way how I believe we can sustain is exactly to focus on the particular segment and rely on our strengths, which we historically have. And I think it's a question to each of the company like us, what is your strengths and where you would like to put your bet on in order to sustain in the future.
Great stuff. Thank you, Maria. Thank you, Breno, Kirill, as well, for joining us. Really great conversation there on how we can use data intelligence to boost transactional profitability. Thank you for everyone who's joined the FF News Virtual Arena. I'm Ian Horne. It's been a pleasure hosting this session today.